Welcome to this week's in-depth market analysis for July 11, 2025. The Indian equity markets experienced a notable downturn last week, which has raised questions about the future. This analysis will examine the factors that influence the market's performance, expert opinions, and the crucial drivers expected to shape the coming week. The Indian stock market ended the week of July 7th to 11th on a lower note, marking the third consecutive weekly decline for both Sensex and Nifty 50. The Sensex dropped 689.81 points or 0.83%, closing at 82,500.47, while the Nifty 50 declined by 205.4 points or 0.81% to close at 25,149.85. This reflected a shift in investor sentiment influenced by various factors. Domestic institutional investors or DIIs provided support through consistent net buying. Conversely, foreign institutional investors or FIIs were net sellers, contributing to the broader market weakness. Several factors contributed to this bearish sentiment. Firstly, global trade uncertainty increased due to US President Donald Trump's rhetoric regarding potential new tariffs on imports from Canada, the European Union, and Mexico. This sparked fears of a potential 500% tariff shock on India, leading to market jitters. Secondly, the initial phase of the Q1 FY26 earnings season disappointed, with major IT firms like TCS reporting weaker than expected results. TCS saw its constant currency revenue fall by 3.1%, the third consecutive quarter of slow growth, impacting not just IT stocks but also creating ripple effects across other growth sectors. Thirdly, foreign institutional investors were net sellers in the Indian equity market with significant outflows observed. On July 11th, FIIs offloaded equities worth Rs 5,104 crore, adding pressure to domestic indices. The cumulative FII selling in July has reached 10,062 crore rupees, which contrasts with the earlier periods where DIIs provided a strong cushion against such outflows. Fourthly, the Indian rupee weakened against US dollar, driven by the weaker equities and firm commodity prices, including the rising gold prices. Finally, there was a shift in sectoral performance. The IT, auto, and realty sectors have faced heavy selling pressure, while more defensive sectors like FMCG and pharma showed resilience. This indicates a flight to quality among investors seeking stability amidst the uncertainty. Several key events are expected to influence market direction this week. The QY FY26 earnings season continues, with the results from major companies across various sectors anticipated. These announcements will likely drive stock specific movements and broader market sentiment. The release of inflation data for both India and the US will be closely watched, as it will provide insights into price trends and potential monetary policy decisions. Traders are also awaiting the release of US jobless claims, which will offer further insights into the US labor market's health and its potential impact on global markets. Additionally, the IPO market is expected to remain active with new public issues and listings, which could draw investor attention and impact market liquidity. While an interim US India trade deal might potentially soften tariff rates to below 20%, the market remains edgy, awaiting clarity on trade negotiations, which could have a significant impact on sentiment. Market experts anticipate continued volatility this week. Technical analysis suggests that Nifty may find key support around 25,000 level, although a decisive breach of this level could signal further weakness. Some analysts are recommending a cautious sell on rise strategy, particularly with leverage, emphasizing the importance of managing risk effectively by booking partial profits and use tight trailing stop losses. Fresh long positions are advised only if Nifty sustains above 25,378 level. The banking and financial sectors continue to show resilience, outperforming other segments even in the current weak market. However, the broader market undertone undertone remains cautiously bullish, with investors advised to closely monitor key technical levels, corporate earnings, and global market cues. This analysis is based on information available as of July 11, 2025, and market conditions are subject to change. Consulting a financial advisor before making any investment decisions is always recommended. Thank you for watching this week's in depth market update. Stay informed and invest wisely.